Whole of Africa issued quarterly production updates, reporting a slight increase in the run-of-mine coal production to 202,900 tonnes. Joining us now to look at that is Chief Executive David Brown. Morning, David. Perhaps just summarise the numbers for us. They're just out a few minutes ago, I think.
Yes, they are. The numbers really reflect, I think, the fact that the company is actually repositioning itself from having been a coal producer to more of a project development company. So even though the production was up quarter on quarter, I think it really reflects on the fact that the previous quarter had actually been impacted by rail derailment and obviously flooding. So the increase is not necessarily a continuing trend, but really a reflection on a quarter on quarter comparison. So in essence, we are going to see production go down in the quarter ahead as we reposition as a project development company.
Okay.
You mentioned that move to project development. Why the change in strategy now?
Well, I think twofold. I think one, obviously, the general commodity market and coal, particularly for thermal pricing, has been particularly weak. We had a couple of thermal assets in Mpumalanga that unfortunately were not making profit, and in fact had made a loss for probably the best part of 2 to 3 years. So we thought it was prudent in terms of preserving shareholder value to actually close those collieries and concentrate on the high value hard coking coal projects that we actually have in Limpopo province.
What about the coal sector more broadly? And one hears these signals from it, and I know you're from the platinum, and I want to ask you in a moment how different they are and how you're finding it in the coal sector. But we had someone in from the coal roadmap, and they were saying we really do have to invest in new mines. We've got to invest in new rail capacity to move the coal. And if we don't do it now, there's power station implications, there's export implications. What's your view of this?
Well, I think there's twofold. From our point of view, obviously, we're going to be producing a hard coking coal with a thermal byproduct fraction. And essentially we'll be obviously concentrating on the hard coking coal element, which goes into the metallurgical space. And from that perspective, we'll be obviously having discussions with steel makers and other ferroalloy producers. On the thermal front, quite clearly that market has been oversupplied globally, though we do see within South Africa there is going to be quite a strong domestic demand, particularly, as you say, coming from Eskom in the future. I think one of the important aspects to bear in mind is that there has been an underinvestment in mining, I think generally, particularly in big, large capital projects over the last couple of years, given the uncertainty and the lower commodity pricing, that I think essentially we are going to have to move along in terms of getting those mines opened as soon as possible.
It sounds like you agree that we're taking too long.
Absolutely. And I think also, without a doubt, being a bulk commodity, you asked me the difference between platinum and coal. In the platinum sector, I could put a tin on an aeroplane and it could be with a customer the next day. Unfortunately, bulk commodities, you need logistics, good logistics, and unfortunately, I think we're also lacking in terms of development of the logistics side as well.
You recently also acquired funding, $21 million from Investec. Would you say that's the first step with regard to providing funding for more initiatives and more investment with regard to coking coal, as you mentioned a moment ago?
This particular facility has been made available more as a bridging facility. We have taken on the strategy of actually disposing of our non-core assets. Obviously the timing of those funds is uncertain because obviously there's regulatory hurdles and loops that one has to go through. So from that point of view, effectively it's just a bridge until we get the money from the sale of the non-core assets. In terms of project funding, we'll be looking at raising project funding specifically related to our near-term and our medium-term projects separately.
That's an 18-month period, that working capital thing from Investec. You're listed in Australia as well, have been since 1980, and the JSE since 2005. There's a mining conference on at the moment. You no doubt have taken an interest in that in Johannesburg. Some interesting things said yesterday, and our view was that it sounds like people are telling the truth to each other about a lack of trust between mine owners and government and unions and so on. Now, you've got shareholders in Australia and South Africa. Different perceptions from Australia, presumably, of the South African environment. What are the questions they're asking? How do you talk about our mining industry, given all the things that have been going on? And you've been in the platinum, which has been quite fraught.
Yeah. Look, we've only got about 2% of our shareholders actually on the Australian Stock Exchange. Our other exchange that we're listed on is AIM in the UK, and that's probably where the bulk of our shareholders are coming from.
Well, same principle to them.
So same principle. I mean, essentially, I've been effectively selling South Africa and selling commodities to the rest of the world for the last 16 years. And essentially, when I started, it was actually very easy sell of South Africa. It was a very stable environment. The labour environment also was remarkably stable as well. and essentially the productivity numbers were improving. And in fact, it was a very good story to sell to the rest of the world. It was quite easy. The last couple of years has been pretty difficult. We've obviously had on the back of lower commodity prices as well. We've also had effectively the labour situation over the last couple of years as well. And then coupled, I think, with sort of almost a policy incoherence coming from government. And that effectively what that means is that as an investment climate, essentially they don't provide certainty and stability. And mining is a long cycle investment game. You need 10 or 15 years of certainty to encourage investors to actually put that foreign direct investment into the ground.
What concerns you the most as the chief executive of a rather large mining company in South Africa? You mentioned there that there are concerns. South Africa was an easier sell a couple of years ago, but for the moment, when you look at for forecasts, the next 5, 10, 15, 30 years?
I think policy coherence is desperately needed. I think everyone needs to understand exactly what slice of the pie they're going to be eligible for, and effectively what we've got to make sure is that the rules don't continually change. I think there is great fear now with the recent proposed changes in terms of the Act governing mineral rights. I mean, effectively that the minister now will have greater powers than she's had in the past in terms of discretionary power. I think all those things add further uncertainty in terms of what is, as I say, a long cycle investment, and essentially we need that certainty.
Yeah. Looking at the labour environment, of course, the platinum sector fraught, and that inquiry of Marikana still going on more than a year later. Differences between the platinum and the coal sectors for you, different kinds of mining is one thing. But it's ironic, I think, if you talked about stability more in the labour relations environment when you started talking about South Africa, it's ironic that it actually seems worse and more fraught and beset by a lack of trust now than it was in the decade after we got democracy.
Yeah, I think it has, and unfortunately, I think what we have seen, and we've seen this colliding with, I think, a lack of service delivery as well. And I think people having a perception that not much has changed for the positive for them. And I think when you put all those together, it's a fairly toxic mix, unfortunately.
What can we expect from Coal of Africa in the next year?
Well, I think in the next year we're going to obviously continue to dispose of the non-core assets. We have signed agreements essentially for 4 of those 5 non-core assets that we're going to sell. We then obviously working on obtaining the funding and offtake agreements for Vele, which is our near-term project. Effectively, we could have that up and running within about 15 months, which will then be the cash generator for the group, while we then develop the Mikado project, which is the first of the hard coking coal projects in the Limpopo province.
Well, thanks to David Brown. He is the Chief Executive of Coal of Africa.